Reluctant Preppers provides educational awareness and commentary only. Opinions expressed do not constitute personalized financial advice. Viewers are encouraged to do their own research and seek qualified personal financial consultation before making investment decisions.
As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Welcome back, Reluctant Preppers. We have a first-time guest today. John Adams is the chief economist at As Good as Gold Australia. He actually is calling into us from Australia. John, thank you for joining us on Reluctant Preppers.
Thank you for having me.
I also wanted to mention to our viewers that you're also the host of adamseconomics.com, and that today is Monday, March 11th, 2019. So, John, why don't you take a minute to introduce yourself to our audience, since they won't know you until you do, and I really would appreciate it because you've got quite an experience as an economist and a special interest in sound money and a special outspoken critic of central bank policy. But let us know how you got into that.
Sure. So obviously, thank you very much for having me on the show. So in terms of my background, I mean, I've got a very diverse career here in Australia. I obviously went to university, studied economics. I've been a public servant for state governments, federal governments in a whole host of policy roles, economic and non-economic roles. 2012, 2013, I worked for a senator in the Australian Senate as an economic advisor. So I've seen federal politics in this country firsthand, and I have a range of very deep contacts into federal parliament that I speak to on a regular basis. I've been a management consultant at one of the big four accounting firms, like in terms of Ernst & Young. I've done a lot of sort of freelance writing and journalism for a whole host of publications. But in terms of some of my recent work, and obviously the current role that I have now as the chief economist for a gold and silver dealership is, I've been closely monitoring for about a decade what I would call the structural imbalances in the Australian economy. So just like the American economy going into the GFC, I mean, you could tell that there was a big bubble in terms of household debt, in terms of property prices, the U.S. stock market, record low interest rates with Greenspan at 1% in 2003. So there was a number of key markers that a whole host of people like Peter Schiff and Ron Paul and a few other people said that this was going to lead to disaster. Yeah. Well, so now Australia and some other economies around the world, like Canada, we really escaped the GFC. But when you look at the underlying structure of the Australian economy, I mean, it is extremely sick. So in Australian history, we've had two depressions. We had a depression in 1892, and then we had the Great Depression. And in the Australian case, the 1892 depression was a lot worse than the 1930s, because in the 1890s, the Australian banks failed, particularly in Melbourne, and basically it was a deeper, longer-lasting depression compared to what Australia went through in terms of the 1930s. Well, you had a deputy governor of the Reserve Bank of Australia, so the central bank here, in 2007 admit that at that point the level of debt in the Australian economy, so this is just before the GFC, they admitted that the level of debt was higher than the 1880s and the 1920s. So basically, on the eve of the GFC, the central bank admitted that the level of debt was more than the two preceding periods when we had two depressions in Australian history. Well, what happened was, there was a number of factors that led to us effectively surviving the GFC. One was China. China launched the biggest stimulus package in the world. And obviously China is our biggest trading partner, so that helped us quite a bit. And obviously with all the central bank stimulus, including the US Federal Reserve, it pushed up commodity prices, and we had a mining boom in between 2009 and 2012. So that employed a lot of people. It helped with exports, and it helped rebalance the economy. So that was a big factor. Another big factor was we had a very large stimulus package. We had interest rates gone from 7.25% just before Lehman Brothers down to 3%. We had the federal government and state government spending record sums of money to prop up the economy. We had a very sort of flexible labor market. I mean, we had a fairly decent fiscal position in terms of the federal government. So unlike the US, where you were already heavily in debt in 2007 under the Bush administration, we actually had a record number of surpluses, about 10 surpluses in about 11 years, and we actually had no debt. Our federal government had no debt in terms of in net terms. We had about $70 billion in the bank.
Wow.
Yeah.
It's almost unthinkable to someone from the U.S. hearing that, because we've talked about it for so long and haven't been there for a long time. Even only during the Clinton years were there a few years of, at least on the books, showing a year-to-year budget surplus, but never being out of debt, for crying out loud.
Yes. So we had a conservative government. So the Prime Minister was John Howard. I mean, he and his government ran surpluses for many years, because we had in 1996 about $96 billion of net debt, and that was all paid down. And by the time they got voted out in 2007, they had $70 billion sort of stored away in the bank. And then obviously a lot of that was run down during the GFC in order to prop the economy. So a lot of things were spent right across the country to keep people in employment. And then with the post GFC recovery, starting in China, but then in the US and a few other places. I mean, we basically have traveled along our merry way, and the structural imbalances have gotten substantially worse compared to where we were in 2007. So if you think about it, 2007, we had record levels of debt. You had the central bank saying that the level of debt was more than the two periods before the Depression. Well, 11 years on, I mean, the level of debt in the Australian economy is at record obscene levels. And yet my experience, I mean, when I was working in federal parliament in 2012, 2013, I mean, I had a senator who was an economist, and he and I had several private conversations about some of these issues. But for a whole host of other political reasons, I mean, no one has really sort of come to terms with this. I mean, most Australian politicians are completely clueless about what the real state of the Australian economy are. I mean, everyone's like a Keynesian down here, and everyone thinks that the quantum of debt is sustainable and everything's fine. Starting about 2016, I sort of said to myself, well, I can't stand it anymore. I've got to actually say something publicly. So I started writing a series of columns. So there's a newspaper in here in Sydney called the Daily Telegraph. It's a Rupert Murdoch-owned publication. Okay. So I wrote a big feature in May of 2016 talking about household debt. So for example, obviously, leading up to the GFC, the concentration of debt in the US was household debt. I mean, at the moment, the concentration of debt in America is probably corporate debt, but also in terms of the federal government. Well, I mean, the concentration of debt in Australia, but also in places like Canada and New Zealand, it is in the household sector. So we've got record levels of property prices. We've got a record level of household debt. And basically, the establishment, what I would call the government, the banks, the regulators, the central bank, the media, everyone, was basically, they all had their mouths shut. Everyone was saying that there was no problem. The debt didn't exist. Everyone just said your property is, you need to get into property. Property will double every 7 years. Look, it's a fantastic long-term investment, and the banks our big four banks were highly profitable. So I decided to say, well, hang on, knowing what we said in the GFC, because one of the things that really opened my eyes was, so I went to university here, and they taught me all the sort of standard Keynesian stuff, and then I knew something was a little bit fishy before the GFC, but I didn't have a full appreciation as to what was about to take place. But the thing is that when the global financial crisis happened, the key thing that happened to me was I thought to myself, well, my university degree, because I did like a bachelor's in economics, and then I went and did sort of honors and did a research project. Well, all of that sort of study didn't give me the tools and the understanding to fully comprehend how the GFC took place, and why was it that Peter Schiff in 2005 said it's coming, and Ron Paul as early as 2002 when he gave a speech in the US Congress said it's coming. So obviously I said, well, if Ron Paul and Peter Schiff were able to predict it early, well, they must have a different framework, a different set of economic ideas that led to to have different insights compared to what I was taught. So basically, so it's probably from a 2007, 2008, particularly when Ron Paul ran for the presidential campaign in 2008, 2012. I mean, I've been on a long journey to really unpack a lot of the what I would call Keynesian propaganda that I was taught at university, and figure out, well, what was, if there was any good parts, what were the good parts, what were the bad parts, what are the flaws, but also what are the other schools of thought that I should be aware of, and do those other schools of thought give me different insights to understanding how we are in this current predicament. And that's where I got onto Ludwig, because Ludwig von Mises, I mean, they're not mentioned. He's not mentioned in Australian university. So you can go get a bachelor's, you can do an honours, you can go get a PhD, and you'll never probably hear of his name, or his book, 1912, The Theory of Money and Credit. I mean, none of this stuff is mentioned. So most people, walking out of a Australian university has no deep understanding about the role of money, how debt is created, how boom bust cycles actually occur, and then also the more important thing is, where does the Australian economy sit, basically in terms of that framework? Right. And so I guess part of my mission is that you've got a population that's asleep. You've got a government and a parliament that basically says there's no problem. You've got banks that have been corrupt, and we just had a Royal Commission in terms of last year into the banking system, and what was exposed was systemic fraud in terms of the banks, particularly around how they gave mortgages. So we can go into a little bit of detail about how they committed that fraud. But there's a whole bunch of people who were given mortgages that shouldn't have been given mortgages. So in the lead up to the GFC, I mean, the subprime was people who couldn't afford a mortgage in America was given a mortgage. But what happened here was a whole bunch of middle to upper class people were given mortgages, which are really at astronomical levels of debt, but also based on astronomical levels of asset prices. And now those asset prices for the last probably 15 to 18 months have started to come down. So Sydney's already come down 13%. Melbourne's come down to about close to 10%. And so we're starting to see, the first signs of this bubble unravel. But yeah, I mean, I've been on a bit of, if you want to call it a sort of a moral crusade. I mean, if you want to call me like a Don Quixote or a Zorro or something like that, it's really about saying to, when you look at financial crises, I mean, people who are unprepared, they suffer a lot. I mean, whether it's from suicide to domestic violence to in terms of people going hungry, in terms of poverty, unemployment, all of this sort of stuff. So for me, I thought, well, there has to be someone who's willing to take the debate public and really give an alternative perspective, not just to say that there's a problem, but to really go into some deep issues in terms of why do we have a problem, how did we get here, but also how should they prepare before it's too late? Right. So that's what I've been largely doing since about 2016, and I've been doing a whole bunch of different forums. So when people go to my website, in terms of www.adamseconomics.com, you're going to find, particularly under the economics tab, a whole host of articles that have been writing for the last 3-4 years about different aspects of this. And starting last year, I did a lot of videos with one of my partners in crime, Martin North. And so we've got a bit of a domestic following here. So there's more people awake to what's really going on, but there's still, I would say, 60 to 70 to 80% of the population that are completely asleep to what's really happening. If you go to an average Australian today and say, do you realise that today you've got the biggest bubble in the history of Australia, at the same time you've got the biggest bubble in the history of the world? I mean, people wouldn't know that. They don't understand what that means. They don't understand what the consequences of that, what that potential could play out. And a lot of these people, a lot of these people are very vulnerable to being completely wiped out. So now, part of my thesis has always, when I sort of started along this journey, was, so every time there's been a financial or economic crisis in Australia, the the origin of the crisis has started overseas. So, in the 1890s, it started with a bank going bust in London. With the Great Depression, it was obviously the New York Stock Exchange, but then you had a bank that was partly owned by the Rothschilds in Vienna that went bust. And that bank was the catalyst for the depression in Europe. That sort of spread to Australia. And then obviously when you look at in terms of the GFC, obviously it was Lehman Brothers. We had a recession in the early 90s, which was the biggest recession since the Great Depression. But then there were some origins, obviously, in terms of things going awry in the U.S. economy under the first George Bush. Every article that I've been writing about is to say, well, the history of Australia is we're complacent. We have this saying that should be right. We don't, everything will take care of itself. And I've always thought that something will blow up overseas. So whether it's Jerome Powell raising interest rates and breaking the system in the US, or the Chinese defaulting, or the Italians going bankrupt or something will happen, and then that will spread into the financial system. That will spread into our banks, and then we basically go bust, and then the bubble pops. But what particularly in the last 2 weeks, what I'm coming to the realization is that rather than us being the third or fourth or fifth domino, we potentially could be the first. If you look at where Australia is compared to Ireland, now on some metrics we are bigger. We are in a bigger bubble than what the Irish had before they had the housing crisis in 2007, 2008. So one metric could be household debt to GDP. We are actually at 120%, and the Irish was at 118%. But when you look at, for example, household debt to disposable income, well, the Irish in 2007 was at 200%, and we are at 188.1%, I think, from memory. But also, when you look at net household wealth allocated into the property sector, well, in the lead up to the GFC, America was 48%. So 48% of all net household wealth was in property. Now, the Irish was 83%. China today is 75%, and we are 67%. So on some metrics, we are slightly worse than Ireland. On some metrics, we are slightly behind Ireland, but we are much more closer to the Irish bubble compared to, and obviously Ireland was in much more worse economic shape compared to the US going into the GFC, and we are very close to China or in terms of Ireland. And obviously, even without Lehman Brothers, there's enough evidence to suggest that the Irish housing bubble would have crashed by itself. And I think because over the weekend I just spoke to a couple of experts out of Ireland just to get a sense as to what were some of the early indicators that they saw in terms of when things were playing out in Ireland. And there's a clear sense of evidence that independent of what was happening with subprime and the American banks and Greenspan and Bernanke in the US Federal Reserve, Ireland would have went under because the bubble in Ireland, it was just so big and it was completely unsustainable. So I'm coming to an initial hypothesis that Australia potentially could be the first domino. So anytime you've got a financial crisis, you will find financial fraud. Well, last year, the systemic amounts of fraud was exposed in the banks. And what's happened as a result of that is the banks' amount of credit coming into the economy has slowed down dramatically through this Royal Commission process. And because there's less debt, so anytime you've got a bubble, to keep the bubble growing, you need to push more and more debt into the system.
Right.
Well, because the fraud has been exposed, the amount of debt coming into the Australian economy has slowed dramatically. And as a result, we're seeing property prices starting to fall quite rapidly. And now we're hearing anecdotal stories of people who are in the construction sector, potentially losing their jobs. I've heard of examples of where, for example, in Southwest Sydney, I heard this story a couple of weeks ago where they've built like 200 homes. And they're ready for sale, and they only can get one bid. So they've only sold like one, and there's potentially like 100 to 199 homes just sitting there empty and now they're sort of struggling to sell. So and we're also, for example, here in Sydney, I mean, had coffee with someone last week, and she has friends who are real estate agents selling premium real estate, like luxury apartments here in the city. And some of the 25 agents lost their jobs in the last 2 months. So we're starting to see unemployment go up, and obviously a financial bubble will pop. So politicians were coming to me last year and saying, well, we're nervous about house prices falling. And I kept on saying to them, house prices is not this, because I've been using this language about economic Armageddon. So, and it's really, you could call it flamboyant language. And I've been sort of using it to get people's attention. But the real financial crash really happens not necessarily when the asset prices fall. It is when the debt becomes unsustainable and unserviceable. And so historically, and obviously this was the story in the GFC, was that interest rates go up. And then with interest rates going up, the debt servicing costs go up. At some point, someone says, I can't pay. You have a declaration of insolvency, and then basically things start to melt down. So now that's one way it can play out. But the other way it could play out is that if unemployment starts to rise, and then people who lose their jobs basically can't pay their debts, and then that starts to spread into the banking system. Mm-hmm. Well, we're starting to see some of the beginning elements of that in Australia, where people are starting to lose their jobs. Now, I mean, so the question is, can the other parts of the economy try to prop it up? But, as you know, with any sort of bubble, bubbles will attract massive amounts of economic resources. So we have a high degree of employment in the construction sector, in the real estate sector, but also because we've got this household debt bubble, we've got a lot of people employed in retail. So obviously, if you start to see people losing their jobs, people scaling back on discretionary spending. I mean, we had data coming out last week about in terms of new car sales. So new car sales in Australia fell 9.5% across the country from February 2018 to February 2019. So in the state that I'm in New South Wales, which has the biggest bubble in terms of Sydney, new car sales fell 11%. So we're starting to see some examples of that. But yes, so we're starting to see people spending less, some people losing their jobs, property prices coming down, and the question really is that, well, can the economy find a point of stability that balances this out, or will it unravel and become unsustainable? And that's why obviously I've been looking very closely at what happened in Ireland, because Ireland went from 5 to 10%, and then they crashed to 40% very, very rapidly. Mm-hmm. And policymakers weren't able to do anything to sort of stabilize the situation. So we're very much on the precipice, but there's a big chance that Australia could be the first economy on the block to really go under.
Go under, down under. You mentioned about loss of employment, and we've seen starting to be record numbers of store closings, large chains, even stores that have been around for most of a century closing. There's like 4,500 stores already closed this year so far in the U.S., and that leads to a lot of layoffs, and it also start to see that loss of household spending. And you mentioned that this can start sort of this spiral then when you have fewer people employed, and then you have fewer people spending, and then that becomes a vicious cycle. But among all of that, you've talked about a lot of this sort of laissez-faire, like the no problem, no comment from bankers, from politicians, and so on. When does that cross over into sort of beyond sort of irresponsibility into like almost criminal liability for and lack of accountability for leading people into a truly perilous situation financially, and really people who've been doing their working, paying their taxes, and not necessarily wanting to take on that additional risk suddenly find themselves in financial peril. You've been quite outspoken about the role of not only central bankers but government in collusion with them, or you could at least say they're on the same page, to keep marching us in that direction. What are you writing about and talking about accountability on the part of our public servants and central bankers? Sure. So a lot of people in the last 2 to 2.5 years in Australia have focused on the banks because like obviously I mean the banks we have particular laws in Australia about responsible lending, so you can't so you have to have a rigorous assessment process
in terms of if someone comes to you for a mortgage, you have to have a rigorous assessment process. If there's a clear demonstration that they can't pay the debt, you're not supposed to give them the debt. So a lot of these laws were being ignored. I mean, the regulators were asleep and very lax. There's very cozy relationships between the banks, between the regulators, between the central bank, government, politicians, and all of that sort of stuff. So the establishment has largely focused on the banks, and obviously there's a lot of criminality that was exposed in the Royal Commission last year. Now, when the Royal Commission report came out about a month ago, there's been several referrals to the relevant regulator about taking forward criminal prosecution in terms of the banks. But the thing is that the big concern and the big sort of gripe that I have is, so sure, the banks have done a lot of bad stuff, and the banks were the ones that got a lot of people into debt. But they are at the end of the day here to make money, and obviously, if there is a poorly framed regulatory framework or poorly designed regulatory framework, and there is very lax enforcement. No matter whether it's the banks or other parts of the economy, people are going to bend the rules. So, and I'm not trying to excuse the banks, but you can sort of understand, how this sort of situation could play out. But obviously the bigger sort of issue I have is that the so-called public officials who were there to serve the public interest, right. They have completely failed. So whether it's the politicians, whether it's the bureaucrats in, say, Treasury, so the federal government's Treasury Department, whether it's the Reserve Bank of Australia, we've had 28 years without a recession. The last recession we had was in 1991, and so at the beginning of 1990, official interest rates was at about 17%, and today it's at 1.5%. And over 28 years, we've had interest rates going basically we've had interest rates going down in one direction, and that one direction has been down. Massively irresponsible in terms of monetary policy. Obviously, we've got massive tax incentives that are aligned to the property sector, but also around having tax deductions around debt, and encouraging people to sort of get into debt. But also we've had, we have a bank regulator called APRA, so the Australian Prudential Regulatory Authority, and so they have had a very lax attitude to the banking system as well. So the thing is that I haven't really sort of said this a lot publicly, but a couple of years ago I texted a senator who's aware of all of this, and I said to the senator, when this all blows up, who's going to be held accountable for this? And you'll be surprised to know the senator texted back and said, we're all going to get away with it. He basically said no one's going to be held accountable. So that is the attitude among Australia's elites. I mean, I had a meeting with a federal Australian politician last year. I was like, this is in Canberra. I was in his office. He was fully across all of these issues that I've been covering. He's read my articles, he's watched my videos. He actually believes what I'm saying. And he told me point blank, he goes, the establishment knows they have screwed up the economy. They know that this is unsustainable, but they've got a strategy at the moment of plausible deniability. So what they're hoping for is, just like with every other crisis in Australia, in Australian history, something overseas blows up, and then when it starts to spread to Australia, they will say, well, it wasn't us, we did the best job we could, but how could we have anticipated China? How could we have anticipated America? How could we have anticipated? But also, if we anticipated, what could we? Because in the GFC, what did the establishment say? No one saw it coming. I mean, this was the common talking point in terms of Australia. But in terms of this time around, they're going to say, well, we can only control what we can control, but we can't control how the banks are regulated in terms of Wall Street, or what the Italians do, or what the Chinese do. I mean, we can only respond to the circumstances that are presented in front of us. But obviously, we're starting to see that the emperor in Australia has no clothes, because we're starting to unravel first. And so I think there's going to be maybe an attempt to slow down the potential decline / collapse in Australia, so that they can blame, so they can switch the responsibility and accountability to someone overseas. But I mean, there is a sense that people in this country are not going to take the blame for it, whether it's politicians, central bankers, regulators, and basically whatever the economic and social horrors that sort of play out. I mean they play out, and everyone will sort of try to ride in the sunset and get away with it. So obviously when I've done a lot of videos, particularly with Martin North, I mean I've been particularly aggressive in criticizing the central bank. I mean the governor of the Reserve Bank, I mean, he gives regular speeches. Earlier this year, he gave a speech at the National Press Club. He was met with establishment journalists. No tough questions. He said a whole bunch of things which were, in my view, categorically false about the economy. I mean, for example, he said that the run-up in house prices basically had to do with a surge of population. So we've had a very aggressive immigration program in Australia, and we've had a large number of net migration intake. And basically the argument was we had a whole bunch of new people come in. There wasn't enough new supply of buildings and houses and high-rise apartments that could meet the demand of population, and that was the responsibility of prices going up. So I mean that was effectively what he was saying.
Okay.
Population, immigration, land supply, house supply. I mean nothing to do with the banking system, nothing to do with the quantum of debt, nothing to do with interest rates, nothing to do with corruption in the banks or the lax prudential standards in terms of bank regulation. He basically he whitewashed this. And when I've studied Ireland and spoken to people who were in Ireland at the time, this is exactly what the Irish government did. I mean they basically said it's immigration, because there was all these documentaries and public commentary about the run-up in house prices in Ireland. And what did they say it was? They said it was immigration, it was population, it was land supply, and basically nothing to see in the banks, nothing to see with interest rate policy. I mean, obviously, Ireland's a little bit different because they're part of the EU. The interest rates were set by the European Central Bank. So slightly different sort of circumstance on interest rates in Ireland compared to us, because we control our interest rates in Australia in terms of our official interest rates. But I mean, they basically shifted to a whole bunch of superfluous reasons, and these reasons have been pushed by in the last decade by the media, by the banks, by the real estate industry. And they basically say, yep, the thing is, like, I mean, house prices are going up because of all of these sort of factors. I mean, it is as if that the debt doesn't exist. So obviously when the debt bubble pops, they're going to say, well, we didn't see it, or we weren't responsible for it. And these guys were obviously responsible for everything, and they're trying to get away with it. And obviously, part of what I'm trying to do is obviously warn people that things are, what I told a politician last year, I said, in effect, we have stage 4 economic cancer. Yeah. I mean, this is the worst the economy has ever been. I mean, yes. So we've got low unemployment. Officially we've got low inflation, but the inflation figures have been fudged for at least 2 decades. And we have reasonable amounts of GDP growth, if you want to believe that GDP sort of number. But everyone says everything is fine, but yet the underlying sort of surface, underneath the surface, I mean, the economy is actually quite weak, quite sick. And in my view, I mean, because some people think I'm a doom and gloom merchant, and I keep on saying to them, show me an example in world history where you have a debt bubble this big, either domestically or on a global level, that hasn't resulted in a catastrophic economic outcome. So you show me that example, I'll shut up. But the reality is that example doesn't exist. Yeah. So until the establishment can show me that case study, and show it to me, let me examine it, let's go through the comparators. But until you show me that, I'll keep talking. But the reality is they can't show me that case study because it doesn't exist. So there's extreme risk of a lot of Australians, completely going bust because they've got record levels of debt. They've been brainwashed into a fantasy that doesn't exist. The establishment is trying to basically trying to get away with murder in this country. I mean, the other point that I probably should make that we really haven't touched on is the amount of foreign debt. I mean, the amount of foreign debt in Australia, it is at a record level. So in net terms, I mean, we owe $1 trillion to the world. So that's about 57% of GDP. I mean, the IMF themselves have said that once net foreign debt gets above 50%, the level of systemic risk in an economy, it starts to go up quite dramatically. There's a couple of economists in Melbourne who wrote a book a couple of years ago called Credit Code Red, and their forecast is that we potentially could default on the foreign debt. We've got several debt bubbles. There's a household debt bubble, there's a foreign debt bubble. I mean, part of the reason why the banks have been able to lend all this money is about a third of all of the money in the banks come from overseas. So in gross terms, we owe the world $2 trillion. About $500 billion is 90-day debt, and a lot of that 90-day debt is concentrated in the banks. So that's obviously. If China, if America, if Europe blew up, or Japan, if they blew up today, the way that we would be affected largely is through our would be through in terms of the foreign debt, the international credit market, how much exposed we are to the banks, how much we are exposed, our banks are exposed to the international credit markets. So that's the main mechanism that if something blew up overseas, how we would go under. But independent of the foreign debt, I mean, if this debt bubble. If the property prices and the debt bubble and unemployment starts to continue to unravel in Australia, again, I mean, it could well be that we are the first economy to go. And now we've got 4 very large banks that dominate the sector. Now, I think from memory, the IMF has said that each individual bank is not a globally systemically important bank of themselves, but the 4 in totality would be the equivalent of like a Deutsche Bank. So I mean, like a lot of I know I've heard it on your show, I've heard it on a whole bunch of other US platforms. Where you've talked about, where's this global crisis going to start from? Is it Deutsche Bank, but also is it the Italian banks, is it the Chinese banks,
yes.
So the IMF has said is that if Australia's big 4 banks all went under, that would be the equivalent of Deutsche Bank, and the thing is that would then lead to that collapsing the global financial market. Now, the politicians in the countries will never let the big four banks go. And I've had several conversations with people in Parliament about this. I've said, well, in effect, we have 3 options from when this crisis starts in Australia. We have 3 options. Either you let the banks go and we have a depression, and to be honest, that's what I've called for publicly. So I've done several videos about this because Ireland bailed out the banks, and 10 years on, they didn't address any of the structural problems. And a lot of people in Ireland says that it wasn't worth, because they bailed out the banks to the tunes of tens of billions of dollars, and they said that it wasn't worth it. So because when you think about what are the choices in front of you, you've got to think about you've got to deal with the immediate short term, but you've also got to think, well, what's the best for your country in the medium to long term? So I think. Popping the debt bubble, trying to get the debt out of the system, liquidating the debt, obviously a very Austrian libertarian Ron Paul sort of philosophy. That is the right way to go in my view. Now there is a massive amount of short-term cost in terms of both in terms of economically, but the social cost in terms of, suicide happens in financial crises, and unemployment and domestic violence and a whole bunch of sort of factors tied in with that. So yes, I acknowledge that there's a massive amount of social cost, but if you don't address these problems, what are you doing? You're just kicking the can down the road, and you're just going to blow up an even bigger bubble. And that's effectively what we did for the last 10 years. So depression's one option, or the other effective option is you recapitalize the banks. Now, one way to recapitalize the banks is through a bail-in. What happened in Cyprus? So basically, every major government around the world, and part of the G20, have signed up to this bail-in framework. Now, in New Zealand's got the most transparent system in the world. They have their central bank has a website that says if you have money in the bank, there is a risk that you may lose your money, but through confiscation. So they are very clear about that. But what New Zealand does say is that you as the depositor have the responsibility for assessing the risk of your in terms of the bank.
Good luck with that.
Yeah. So the whole caveat emptor sort of philosophy, it is in full play. So you in some regard you could say it's capitalistic. They acknowledge there's risk. There's acknowledged that there's loss. Now, most governments around the world won't acknowledge that, but they effectively say, New Zealand, you have to determine whether you believe. If you don't trust the banks, don't have your money in the banks. If you think that the banks are fine, put your money in. Now, obviously, the problem with New Zealand is most people don't fully comprehend, or people don't have the information to know whether the bank is safe or in terms of unsafe. But the European Union has signed into a bail-in framework. The United States has signed in. Canada has signed in. Australia signed into a framework. Now, the controversy in terms of Australia is we signed up to the G20 framework. We passed domestic legislation last year. The Parliament acknowledges that, in Australia we have deposits, but you also have these instruments called hybrid securities, which are basically investment products, which in the prospectus says that they can be bailed in, they can be sort of converted from a bond into a share, and you could lose your money. So they have effectively said that these hybrid security is what can be bailed in. Now, the controversy is whether deposits can be bailed in Australia. Now, I've done a series of videos last year. So the way the legislation has been passed and drafted by Parliament, it is very vague. It leaves a lot of interpretation out there. And certain people in Parliament passed the legislation last year on the proviso that deposits were not going to be included, but we found there's effectively a loophole, and we show the politicians to say, when you voted for this, these are the things you didn't consider, and there's a real risk that deposits could be potentially on the table. So we think that confiscation of deposits, like in Cyprus, is potentially legal in Australia. But having said that, the IMF 2 weeks ago released a report about Australia, and they have said, we want you to have a full, transparent bail-in regime just like New Zealand. So
wow.
So basically, so the IMF has said copying the New Zealand model because of the BIS and the IMF, they focus on global financial stability, and they basically say, well, we don't want your banks to go under. That will affect the rest of the world. So have a mechanism that can bail in the banks. So bail-in is one option, steal from the depositors, and the other option is in terms of the government stepping in and nationalising the banks. Now, certain people in Parliament have said, well, depression is politically untenable, so we can't allow for a depression to happen because the economic and social cost of that is so significant that we as politicians won't accept that. Some advisors and politicians said, well, depression's off the table. What happened in Cyprus, we don't want to happen here, because once bail-in happens, the trust between the citizens and the banks, it will collapse for a generation. So for the next 20 years, if this happens, people won't trust the banks, and they don't want that to happen. So they say, well, the least worst option, and given that we've knocked out the first two, is about nationalisation. So when it comes to nationalisation, so just say the banks come to you and say they need, $400 billion, $500 billion to prop up the banks. Where are you going to get the money? And they go, well, because either you borrow it or you print it. Mm-hmm. And these people acknowledge that there is no easy way out of this, but they say we've got to to deal with the immediate short-term crisis. We have to take the what they will call the least worst option, and the least worst option is to print. Save the economy from depression, and if that causes inflation or hyperinflation down the track, they will deal with that when that sort of situation plays out. So now, because this is the thinking of the parliamentarians, well, how are you going to protect your purchasing power? Obviously going to go buy gold. I've been buying physical gold and silver for about two and a half years, and largely it is because I anticipate that the establishment and the parliamentarians are just going to print. They're going to spend. They're going to implement the full Keynesian model, and some of the people realize that there are consequences to this, but they said that the consequences of that are probably less horrific than having a full-blown depression. Well, the thing is that because of our net foreign debt, so look at what happened with Turkey last year. Confidence in the Turkish lira collapsed. The Turkish lira fell about 32% in 3 weeks. If you look at the Asian financial crisis in 1997, the South Korean currency fell 40% in 3 weeks. So, I think we could be on the verge of a dollar crisis in Australia because of because of the amount of foreign debt we have. And obviously, if we lower interest rates to zero, I mean, the Reserve Bank has already said we'll go to QE. I've heard privately that officials have looked at negative interest rates. I mean, the IMF has called for a negative interest rate up to 4%. If people go to my website, I just wrote a recent article about that. But also the politicians in the Reserve Bank and the central bank in Australia have said that we have a lot of capacity in terms of the federal government balance sheet. So they want a massive stimulus package. So they're doing all the Keynesian things which should give people confidence that we're unable to service our debts because we've got to inflate our way out of this. But two, we don't care about the integrity of the currency. And I can't find a single voice. I mean, I've got a lot of friends in politics, and some of my best friends work for people in the Senate. And I say to some of my friends, your boss, your senator, isn't talking about the stability of the currency. I mean, there's no one talking about sound money. Mm-hmm. No one cares about if the dollar collapses. And I don't think it's a risk that a lot of people are considering. But when you look at economies that have high levels of debt, high levels of foreign debt, and they just continue to print, whether it's Argentina or Venezuela, I mean, there's a particular outcome that can play out. And so that's why I've been buying gold and silver, and I joined as a chief economist for a gold and silver dealership because the politicians and the advisors are telling me, well, this is where we're going because depression and liquidating the debt is completely off the table.
Well, John, we are out of time for tonight, but we're going to have to get you back on because I wanted to ask you, you're talking now about sound money, gold and silver, but I wanted to get you back on to talk about what is the status of the sovereign holdings of gold on the part of Australia, the national holdings, and what has happened to those, because you forwarded to me an article about, I think the title of it is, It's Not Venezuela, It's What Happened to Australia's Gold. So we're going to have you back on to talk about that. So people can find more of your work at adamseconomics.com. We're glad that you're here and that you're speaking out and getting the word out about this, because the more people who hear this, the more they can take protective steps themselves, because it's clear that the bankers nor the regulators nor the politicians are going to take care of us as individual homeowners and families. We've got to take care of ourselves. John Adams, Chief Economist for As Good as Gold Australia, thank you so much for joining us again here on Reluctant Preppers.
Thank you very much.
Hey, Reluctant Preppers. If you haven't heard, we've already started our monthly 1-ounce U.S. Silver Eagle thank you gift to one active Patreon subscriber each month, signed by your host, Dunnigan Kaiser. And you don't want to miss out on that.
Please help us grow by subscribing today at patreon.com/reluctantpreppers.